Hey guys, it's Andrew from Apex Trades. I do hope you are well. The reason for today's session really is I wanted to talk a little bit about order flow, or in my opinion, how people don't use order flow as best as it could be done, right? And in the sense of, you hear a lot of specifically younger traders or traders coming on with smart money concepts and all that kind of stuff, and the fair value gap, and realizing what a fair value gap in the sense of imbalances, right? Because ultimately it's all about imbalance, and usually what that means is you have a overwhelming disproportion on an order book, right, where it will either be a lot of orders come in on the buy side, which is called the bid, or a lot of orders will come on the offer side, which is on the seller side. More so an overwhelming disproportion than the other side, and you'll get that big long candle, right? And the biggest misconception that I see a lot of people make is they use time-based understanding, so how long it takes on a candle. Now, I've done pretty well lately, right? I've just been moved over to live with Elite, and predominantly the way I trade looks for things like, I'm a scalper by trade, right? But I tend to look at imbalances and where price is inefficient, and that's what it is. It's all about inefficiencies, right? And usually what the market likes to do is to fill in those inefficiencies. So really today is to just give you some sense of how order flow is a million times more accurate than a typical time-based flow, right? And we're going to use different ways to show that. So without further ado, I'm going to dive in. So the first thing you'll notice here, on my chart, I have two side-by-side sections, right? I have time here, and I have order flow here, or tick-based chart. So this is 100 ticks. This is just time. What this tells us and what this shows us is it's going to, for every minute, it's, price is going to move up and down, and irrespective of what's happening on the order book, it's just going to print what it sees within that 1 minute time frame. However, here on the order flow side, on the tick chart, it's showing us based upon 100 ticks. So what happens in that 100 ticks, irrespective of time, once 100 ticks have been exchanged either to the buy side or the sell side, it's going to show us what that is. Now here's a really interesting point, right? Just as we can, this is all live, right? This candle here on the 1 minute chart, we see an imbalance here, right? But if you actually look, the true imbalance of that is this, right? This little small gap here, not the entirety of this whole area. Now this can be transposed on minute, 5 minute, 10 minute, an hour, whatever. It doesn't really matter. But what this provides is a true reflection of where the inefficiency is on that single chart. And so I would assess here at this point that what you probably will find is, people would say, oh, that imbalance is, maybe 50% full, whatever. It hasn't been filled at all, right? Because that's the true imbalance there. The difference between that and that candle, that gap, that's the true imbalance of what we're seeing. And you can see these all over the place when we actually look and define it. Because on the 100 tick chart, we're actually showing where the imbalances or inefficiencies are actually taking place. Now, I would say it's not 100% guaranteed that during a session, of Asia, London and New York, you tend to find inefficiencies that get created will generally get filled. Not always, but more often than not, they will get filled. And so let's just look through what we can see. I mean, you can see here clearly we had an imbalance here, right? Big, long imbalance. What was the true aspect of that imbalance? If we pull that across. So this was the imbalance here, right? Which is true. It started here, and you can see here, this is the inefficiency. Never quite got closed there. Hasn't been closed there. Hadn't kind of got a little bit of a one there. So this reflects probably a true imbalance of that drop there. But it's not always the case, right? What about this one a little bit further down? So we have no imbalance there. But we don't have any imbalance here, right? Because you can see, you know, these candles have closed that imbalance as it would see. That would be a true imbalance, right? From here down to there, which got filled in here. And typically this is what you see with price action all the time. Just moves, fill in the gaps, moves, fill in the gaps, move down, fill in the gaps. It happens all the time, right? Big move here. Fill in the gaps, fill in the gaps, fill in the gaps, almost entirely to here, comes back down, fill in the gap, but now we have a gap here. Did that get filled? Of course it got filled in down here. So for a scalper, like, looking at time is great, right? Because, you know, that's traditionally what most people look on Japanese candles. They're looking at time. If you look at tick charts though, like I said to you, that's constantly being printed. It's constantly showing inefficiencies at such a small scale. So for a scalper, it's fantastic, right? Because I can see where I think, at least more often than not, price is going to reverse back to fill in that gap. So even when you're on a trending market where price is moving down, it's like, okay, well, do I dive in here? You know, do I want to miss the move? Just wait until it comes back to fill a gap and then get in if you think momentum's still going down. You know, if we try to move this to, say, let's say a 15-minute chart. Right, so, you know, you'd argue here, okay, well, we have a big imbalance, right? It's a 15-minute imbalance. What time was that at? That was at 6 a.m. Let's go to 6 a.m. on the tick chart and let's see what we can see in terms of imbalances and, you know, is it valid? So we know moving from here across, there's no price action. So we know this is a full live imbalance, right? But the imbalance effectively starts from here and then we come right the way down to here. But where is the true imbalance? No real imbalance here at the top. The actual start of the imbalance is here, right? Because all of these are filled. So straight away, I know, you know, where I expect at least some point today price to reverse back to is probably at least here. Right, you've even got a further imbalance, I believe, here as well. If I go back a little bit further, here at the start of the session. So where was that? That was there. But actually, so it is a true indication. There is no imbalance here. That shows us an imbalance on the 15-minute, right? You can see it's an imbalance because that's the bottom of the previous 15-minute candle and there's the top of the other 15-minute candle. So you'd say, okay, that's an imbalance normally. Why? Because it's time based. I can see that there's a gap between them two candles. But is that really true? Well, let's look at that 15 minutes here. That's that 15-minute going down. None of this price action is inefficient. It's all balanced, right? Because price has come back up and tagged and filled in that gap, but here shows an imbalance. So what order flow gives us and what tick charts gives us is the true representation of activity on the book during that 15 minutes. Because on a 1 minute candle, price can go up, can go down, or a 15-minute candle up, down, but then finish low down. So it looks like a complete gap, but the reality of it is all of the stuff that happens in between that has filled those gaps effectively. And so it's a quick one. I didn't want to come on too long. I just wanted to kind of, specifically for newer traders, when they start to trade, what they don't realize is they just, you know, jump to SMC or ICT or whatever else. It's understanding the actual, what inefficiencies are and why they get filled, and actually where are the true inefficiencies, because it's not just about looking at a gap on a candle and going, okay, well that's the gap that I'm going to put, you know, me block there, and if price comes somewhere in this region, that's where I'm going to. Why? Get more defined, understand order flow a little bit better. And there's many ways to understand order flow. There's footprint charts, there's Bookmap, there's all these different things. In all honesty, it doesn't really matter. It's just an understanding of the reality of what's happening on the order book and what's being printed versus just looking at a time chart and going, okay, well that's an order flow, or that's a, you know, a block here that I'm gonna dive into. You see it all the time, right? this is inefficiency, at least here. I expect price will come back and fill that. There's inefficiency here. I don't think it's being filled. No. But look, inefficiency here gets filled here, but then we create more inefficiencies. But then what do? We come back down and we fill them inefficiencies. We create inefficiencies here. We come back up. We fill that inefficiency, but then we create a new inefficiency here. But then we come back down, fill in this inefficiency, and of course we create more inefficiencies. Then we fill them up again. This is the inefficiency here, gets filled by this consolidation, and that's all it is. It's just look, inefficiency there. I said before while we were live, you know, this would get filled by that. We're creating a bit of an inefficiency here. So what? Of course, I would anticipate the price is going to come back up at least to this line and fill this gap before moving down. And so just use that as a way to understand it a little bit better, because it's a undervalued. Specifically for newer traders, it's a massively undervalued skill set that I think is beneficial, specifically if you're a scalper. That being said, I'll see you guys in the next one.